Hey guys, welcome again in my video. So kind of strong energy I'm feeling right now, so I intended to make this video right now. Uh, so this is a great weekend today, right? Everybody must be enjoying. Uh, it's Sunday today. So right now I have opened a stock. Its name is RCOM, right? Reliance Communication, and this video I'm going to make for the purpose of trading. So don't feel it like that I'm making this video for investment purpose. No, because RCOM can't be a stock to find it like a investment asset. So what I'm going to talk in this video about, it's not like a strategy that I'm going to put it here, but it's kind of some misunderstandings that you should put out, and kind of things that you should remember. You can say sort of this video is about do's and don't do, right? So I have inserted two uh, moving average right now in this chart. You can see it clearly. If you can't, I'm just going to make it large. So I hope this must be clear right now. So this is nothing, I'm not a great follower of moving average or any indicator, but right now I've inserted this in this chart because I'm making this video for all the people who love indicators and who want to just sort of believing in indicator. So this kind of feeling I got, like, so why not to make the video on this purpose, like so that they can read it intuitively. So this video is all about comparing the price with moving average, and how can you use just a naked chart, and if you are not great in reading naked chart, then what should you do. So this is the reason why I have this moving average in this chart, right? So what this moving average says uh, about the market, and what the price alone says about the market. So let's get into that without wasting much time. So right now we all we all know that RCOM is a stock uh, which is kind of in the phase of range bound for so many time, right? So long time, I mean. So you can see it has got some more noise right here, right? So this noise was kind of some, I don't know what was the cause behind this, but must be some news or some results, or maybe a corporate news, right? Or maybe some impacts because of new investors in this, or maybe speculations also, right? So what kind of things you can read right now. So I'm going into first moving average, what moving average is telling you about. Right now, can you see that moving average I have inserted here is 14 and 15, right? So you all know that when a small moving average crosses large moving average to the upside, it says you that market is going into off phase, right? When the small moving average is crossing below the large moving average, so you follow it like that market is going in downtrend, right? So right now you can see that it was a great move. So as you all know, what is technical analysis, what is technical analysis is about, as we are follower of charts, we are follower of indicators, but if you do not know the basic of technical charts, we kind of missing many great things, right? So what I am indicating here right now in my speech, uh, that technical chart is all about reading historical price. So does it mean very specific to price. So let me introduce you about some technical charts, like technical chart patterns you are following because it has been written by many authors. Is that so? No. It may be researched well. If this is the cause, then yes. Right. So every chart patterns have good research over that. Maybe many trades have been taken on that, and then it has been counted that trades are winners and trades are losers. Like when they get more winners than losers, then they find it a good, great tool or great stock chart patterns. Right. So here is a chart pattern, like a very specific things about the chart pattern I want to add on here. A specific thing is that every chart pattern is nothing but consolidation phase. If I'm wrong, tell me, because if you are following like any you know triangle patterns, it's also a kind of consolidation or range. Right, if you are following any triangle pattern, it is also kind of consolidation. Right, consolidation or range bound does not mean that it will always be in the box phase. Right now, if you are looking at this is in the box phase, or this is like a rectangle. Right, so let me just draw it here so that you can find it better. So we do have a tool here. Maybe some of you draw it through horizontal tool, or maybe some of you who know advanced tool charting patterns and all that, kind of following this rectangle, right? So this is a kind of rectangle. I have not drawn it here perfectly, but I can do it kind of, yeah. So the more touch, where the more touch has happened, right? So kind of making this like this. So here there was a fake breakout. Why I say fake breakout? It does not mean that it has a fake breakout, but if kind of following it uh, in a way as a trend, then it may be a fake breakout or maybe something else. But you could have taken the benefit of this also, because when the triangle breaks, so like here it has breaked, right? So you could have taken the benefit of this, like through here, because it is uh, very much if you measure it distance from here to here, it will be very much equal to here, right? So this is the way to follow chart patterns. Like when it breaks, you measure from here to here, and you take the target uh, uh, very same that you measure here, right? So you might have taken this benefit or might not, but when when chart patterns again come into the patterns, right, come into this range, then it is again supposed to be in the range, right? So you could have also taken this benefit right now here, because moving average also tend to follow the price, if you see this, right? So moving average always follow the price. It's just the average is nothing more than that, right? It's just average. Like if you have taken the 14 moving average, it means that it is just uh, adding the average of those last 14 candles price, right? If you are kind of following the 50 moving average, it is the average of last 50 candles. So this is nothing more than that, right? If you follow it naked, uh, you could also do it. So why I can say that, because you may also say it, hey, you are saying it because it has happened. No, I'm not saying because it has happened. I'm saying because if somebody who has some experience or who has little experience about candlesticks, how price action works, he can say it that there is kind of momentum is coming in the uptrend, because here when bear candle went down and a great rejection came here, right? And then momentum comes here if you find this candlestick, and if you see the volume chart here, right? So candlestick as well as volume both are biasing each other, that momentum is coming right now. So again, how can I get the benefit, how could I get the benefit from this rectangle chart patterns when it was a fake breakout, if I could say that, right? Then it went into the range, and after getting into the range, I could have followed this, like I could have taken the benefit of this to touch it, right? Like this target. So why I have taken this Arcom chart? There was nothing like that. I have just explained you about these things because there is some kind of opportunity making into Arcom, and you know that Arcom is getting very bad effect because of bad fundamentals, right? So Arcom is into the consolidation phase, and if you are a good reader of fundamental, you would know that company is doing bad, right? Because company is increasing debt, and so this debt is making companies review bad. So the technical chart pattern reading means kind of reading the fractal. What I mean when I say fractal, fractal means technical charts have very good reason to make the repetitive patterns. Here the same patterns was made into this chart. You can know here if you see this rectangle, and again the same fractal is coming into this, right? So it was a very good scenario when you have this opportunity and good separation between moving average. It means that price has great momentum. When you have good separation between moving average, a large moving average and a small moving average, it means that there is great momentum in the market, right? So it is kind of which is supporting the momentum to the upside, which is saying that there is a good momentum in the upside, right? If you read the price action. So again here, the price is into the consolidation phase from 11:05, I mean 11th of May to it's sorry, I mean 5:11. Actually I'm looking at 1 hour chart. I forgot that I'm not looking at 1 day chart. So it is month of November 11, and this is the month of, so 5 to 30, 25 days of consolidation phase, and I can see that there is a great momentum. It might be a momentum because of a speculation, but you do not have to follow this momentum blindly that you just have to buy. No, I am not saying you to buy because of just great volume and great momentum. It might be also manipulative things. I mean, it can also be a market making sense. So you have to just wait for this breakout of this rectangle pattern here to the upside. But I kind of not following any patterns blindly, because if I see Arcom is badly performing, so I won't go to buy it just because it breaks to upside. But what is the great opportunity here? If I see that there is a great rejection coming to the downside, because this is a consolidation phase, and I think that Arcom may get down, or may get break to upside, may get up because of breakout, right? So this is final conclusion. That conclusion will be uh, decided when market rejects this level of resistance, or market breaks this level of resistance. But it is all depends upon your risk, because if you can't decide your risk, if you can't decide whether you have to take risk, you can't make money in the market. So you'll always have to follow this rule, and always make in mind that you can't be always a winner, right? So you just have to work on risk management, you have to work on position sizing, you have to work on you have to think in the sense of simple sizes. You can't find it a result, a successful result, without making a simple size of trades, right? You always have to think like in the term of 10 trades, 20 trades, right? Don't make it so complicated by following one trade and uh, believing 100% that this is going to be your trade. This is kind of things that I wanted to explain you here. There is no motive to advise you whether you have to uh, get up when it breaks, whether you have to sell or short when it rejects. No, that's all the sense was to make this video is so that you could follow something approachable in the market, something that happens every time, right? So you have to make in your mind, you have to always think like that. So this session was just about following the naked chart and how to use the moving average, and how to follow something that is happening bad, and then when it came down, when it comes back into your range, and you can trade it like a professional, right? So you can see that. So many of time it is making like, it was also kind of a very good range. Yeah, we can't say it a good range, but it is a range also. Here up to here it was a range, and it again came up into this range and again break through it, and a good separation to the moving average, right? So you could have followed, and a great momentum came here, and very good separation made into here. So it was kind of things that was obvious here, right? So you can follow many fractals. Here it is also a kind of fractals you could follow, like breakout to the upside, right? So this is just what I wanted to say you, that you could wait for the breakout, or you could wait for the great rejection to the downside to short, or if it breaks to the upside, you know how to follow the rectangle chart patterns. You have to take the profit target from this level to this level, at least. Like, this is not a great price, like 1 rupees, but yeah, of course, if you find it in the term of percentage, this is a good kind of percentage, because it will be counted in 14 ka 1, right? 1 rupees of 14. So I hope this session uh, helped you. So I'll get back to you all with a new video. So thank you for watching this video.